Good evening, KCF members and guests. With the lockdown 5.0 going into implementation, we hope all of you are doing well and keeping safe. As most of you resume your business operations after a 2-month plus gap, one important question that would arise is on working capital management and other financing requirements. Despite several announcements by the Indian government for MSMEs, there continues to be a confusion among MSMEs as to how they can avail of the schemes and how various changes, such as moratorium rules, MSME definitions, etc., affects them. To address this, we at KCF have arranged today's session in association with the CFM Group. I'll just take a brief moment to introduce the CFM Group. CFM Group is a leading financial services company providing a comprehensive range of financial solutions to growth focused corporates by facilitating its growth, investment, and strategic plans. CFM is focused on key businesses such as investment banking, merchant banking, corporate advisory, and stressed asset resolution. And over the last decade, they have arranged and executed transactions worth more than $6 billion. The group also houses a RBI registered asset reconstruction company with an assets under management of over 1700 crores. Their presence is across Mumbai, Delhi, Chennai, and Ahmedabad. And we have from their end today on the panel Mr. Jyotish Saran, who is the CEO of Chartered Finance Management Limited, and Mr. Dinesh Pandey, who is currently Deputy CEO and designated MD and CEO of CFM ARC. We welcome them. I would now like to introduce our eminent speaker for this webinar, Mr. Kishore Kharath. Mr. Kharath is an acclaimed banker with 41 years of rich professional banking experience. Of these, 7 years were with foreign postings in UAE and Trinidad and Tobago in West Indies. Mr. Kharath has board level experience of about 12 organizations and more than 6 years as whole-time director, including as MD and CEO for 3 banks, which includes two prime public sector banks and one foreign subsidiary of large public sector bank. He headed Indian Bank as the managing director and CEO from April 2017 till August 2018, and in a short span of just 16 months guided the bank to emerge as India's best bank. Prior to this, he was managing director and CEO of IDBI Bank Limited during the period August 2015 to April 2017. During this stint as MD and CEO of IDBI Bank, he also served on various boards of IDBI affiliates as well as director of Exim Bank of India. He has also served as executive director at Union Bank of India and as managing director Bank of Baroda, Trinidad and Tobago in West Indies. We are greatly honored, sir, to have you here with us and request you to please begin your address. Thank you, sir.
Thank you very much, Mr. Karan. Am I audible and visible?
Yes, sir. Yes, you are. Yeah.
Okay, good. Thank you. So, thank you, Mr. Karan. Mr. Philip Shah, President of this Kutch Corporate Forum. Also, Mr. Jyotish Saran from CFM. I would like to tell all the members of this Kutch Corporate Forum that I am actually immensely delighted to speak to all of you today, because right from my banking days, I basically started my career from Bank of Baroda, and after 41 years, I moved to 3 more banks on elevations. But being from Bank of Baroda, of course, it was rooted in the Gujarat, and this Kutch area used to really fascinate me a lot. And therefore, when this invitation was given to me, I was really looking forward to talk to all of you. This area is really full of all entrepreneurs. And if you really look at it, the geographical and economic situation of this Kutch, in fact, it's a very challenging one. It's a very diverse. When I said it is very fascinating, because the way there are a lot of diversities and still the region actually always vying for the prosperity, and that's a good sign of this particular region. And therefore, when all of you are actually hailing from that region, I thought this is a good group of entrepreneurs who are, very enthusiastic, very interesting, and always overcoming all the challenges in your life. In fact, today's challenge, what we are facing is, I think you have faced many more challenges than what we are going through today. But still, we will just touch upon all the issues, what exactly are actually bothering us. And as per this title of this webinar, the way forward, the road ahead, how we can march ahead, we will try to touch upon that. I also would like to mention here about the CFM because they are the co-sponsors of this program, and I am also associated with CFM on their various uh, functional areas. Actually, CFM is very much active for more than 2 decades in the financial services, and right now they are supporting all good corporates as well as the corporates which are actually going through a lot of stress, and these kind of services are very much required in today's days. So I welcome Jyoti Sharan, and let me begin with my dear friends. The current situation, why it is actually different. All of you, in fact, this is my 15th webinar, and almost every webinar, people are having lot many questions about the current situation and how to go about it. This current situation is slightly different than what we have seen in our historical data. If you see, uh, this is different than even 1930s depression, and what everywhere worldwide people are talking is because of this COVID-19 pandemic, the situation may be worse than the depression of 1930. The World War II of 1945, if you see, the aftermath of World War II also was uh, very, very critical for almost more than two-thirds of the world. And the countries like Japan, which were totally, vanished from this earth, but still today the Japan is one of the leading economy. This pandemic is different because during all those issues, even recently, we have seen in 2008 and 2011, whatever financial crisis was there worldwide, starting from the American meltdown, started out of those uh, prime subprime lendings, and thereafter European crisis also. But all this we have overcome very easily, and this time we are finding it very difficult because in all previous challenges or all previous issues, whatever where actually we were facing, the worldwide impact was not there so much as we are seeing today. Today, the entire economy of the world itself is like a lockdown. Most of the developed countries are also facing the same problem, like the underdeveloped countries like ours. And there is not a single country which we hear or which we can say that this country is actually escaped from this pandemic situation or because of this economic crisis. In our country, you have seen we have been going through the lockdown. There was a severe lockdown for almost 60 days. And I'm sure all of you, the members who are sitting here, who are joined today on this webinar through Zoom or through even YouTube, if you recollect, you must not have seen in your lifetime this kind of closure of business for continuously for 2 months. And therefore, this pandemic is slightly different and slightly more bothering us insofar as our economy is concerned. This has actually given a setback not only to individual units, but also to various countries, to our country also. If you see, our country's economic situation also has started depleting very fast, so much so that the country which was growing at a fastest rate than all other countries, all other developed countries, we were actually growing at 5%, 6.5%, sometimes 7%. But today people are talking about, even negative 5% growth we are going to see. That means we all are staring actually at the bigger depression. Now, the government had actually two challenges. And one thing we must, all of us understand that in this particular generation, all our whatever whosoever is living here today, nobody had experience of handling this kind of magnitude, this kind of pandemic, which is having a really very large magnitude and the impact of which is magnanimous. Because we were not having any experience of handling this, at all levels, whatever we are doing is we are doing trial and error. Whether it is on the health front or whether it is the economic front, we are actually, all of us are struggling to see that how we get over this problem. Whatever it is, we Indians are always, having that fighting spirit. In fact, because our country is so much of challenges always, we are immune to bigger challenges, and we can rather get over the challenges very quickly. And therefore, you must have seen, I think most of you are from Mumbai, and the Mumbai city always actually goes through some kind of challenge or the other. Of recent of it was this our cyclone Nisarg. We are all prepared to face that cyclone, but very fortunately, actually, cyclone itself distanced from Mumbai, and it has spared all of us. So that additional problem, which was actually we were looking forward, that is at least gone. Now, if you look at this, as I said, we are staring at the depression almost, and what people are talking worldwide, that almost 25 to 30% of the businesses are looking towards the closure. And this closure is happening because of various issues which they are facing on the front of it. In India also, if you really look at it, many of us are actually facing similar problems. But I think in India, we will be in a position to get over very soon. If you look at the situation, what is there in India, all of us actually entrepreneurs, particularly, we have grown entrepreneurship so well, and most of the entrepreneurs are actually, I can say, even though our Prime Minister has given us a call about Atmanirbhar Bharat, most of us having that feeling because our upbringing itself is like that of Atmanirbharta. That means self-sufficient. How we actually grown in that culture of being a self-sufficient, and therefore we always have something or the other saved for the rainy days or for the difficult period, and that gives me confidence that all of us will be coming back in the operations very quickly. After this lockdown 4 was over, now we are actually running into lockdown 5, but nobody's talking about lockdown 5. People have actually started talking about reopening phase 1. And when we are reopening this economy, all of us are going to start our businesses. All of you are going to start your businesses. And after this more than 60 days of closure, when you reopen your businesses, how is the situation? Because when we talk about road ahead, how is that road ahead and how we are going to actually start walking on that road ahead? My first observation is all of us are looking for survival first. I'm talking about the businesses. Of course, on a health ground also, if you look at it, we are actually struggling on the same front. Everybody is scared that whether this coronavirus will catch them from anywhere. Unfortunately, this is a very invisible enemy, you can say. And we are all scared even for a moment. We are scared to meet people. We are scared to be in the groups. We are scared to be in the friend circles. But since it is going to be a long time issue, we have already decided that we need to start living with this pandemic. And therefore, we already started moving out. We already started going out. Government also started opening all the areas except for certain containment zones. When we start the businesses, the issues will start cropping up. You will, one by one, you will start facing what are the issues actually coming up in front of you. The first and foremost issue, what I feel is an operational issue. And I will segregate this issue rather into two issues what you are going to face as a businessman. One is your operational issue. And in operational issue, one thing you will see when you reopen your businesses that the customer preferences must have undergone change during this pandemic, because in 60 days when we are actually staying at home in a lockdown situation, what we have learned out of this pandemic is what is essential and what is not essential for our living. So our living will continue, but living standards will change. And because our living standards, our preferences will change, definitely it is going to have impact on our businesses. You must have seen there are many informations, many articles are coming out that which kind of businesses will actually be surviving, which kind of businesses will face a certain challenges, which kind of businesses will be immediately revived, which will take little longer time. I think these all material is available, and we will not discuss that much here, but during question answers we can definitely answer all that. So customer preferences is the first thing you will have to look at it. What is your business model? Whether it is fitting into that customer choices which are realigned as on date, and whether you are in a position to quickly align your business models with the customer choices. The second problem what you are going to face is restarting your businesses. That means those who are in the manufacturing industries, when you open your workshops, what is the situation of your machineries, what is the situation of electricity? So all those processes you will have to run through. Third is, which everybody is talking about, is the workers. And all of you know, during this pandemic time, the most affected people were these workers, and particularly the daily wages workers who left their workplaces and went to, out of fear and out of necessity of survival, they traveled back to their hometowns. But because of that, right now there is a shortage of workers. Many industries which are open, they are actually reporting that they are finding it difficult. And if you look at it these days, what we are reading in the news and reading in the newspapers also, that many of the industries are trying to bring back their workers. Even some of them are hiring a chartered flights to bring back and offering them a better service conditions. And I'm sure within next few days, these workers will also come back. The very fact that why there was a migration of these workers from their hometowns, wherever they are, whichever state they were, because there were not good opportunities, livelihood opportunities for them in their areas. So they were actually moving to the areas where they are getting a livelihood, they are getting something to work and earn money for their living. And having gone back to all those areas, I have my own doubts whether those areas will be in a position to absorb all of them insofar as employment opportunities are concerned. But having made their own family members and all out of this pandemic fear, I think by now they must have settled down, at least emotionally, they must have felt better. In a few days, they will start feeling that yes, now there is a time for going out for some livelihood. And in that case, when there are uh, some of you are trying to initiate some actions to bring them back, obviously they will welcome it. They will also like to come back. But let us say it will take time, 2 to 3 months, and we are actually heading towards the monsoon also. So during this monsoon time also, normally there is a slowdown. So this next 2 months, in my opinion, again, we are going to have a continuous slowdown in your businesses. One more operational challenge what you are going to face is your forward and backward linkages. Whether your supply chains will have the same continuity, whether they are also in the same, whether they are also in a better shape or better situation to continue their businesses and do the supplies to you. Your forward linkage, your buyers, whether they are also having the similar situation or whether they are having a difficult situation to buy, then that will definitely create issues for us. So there are many various rather operational challenges, and one by one, unit wise, actually these challenges will differ. Industry wise, we can actually jot down these challenges, and your forum is actually doing excellent work, this Kutch Corporate Forum, of educating all the members on various areas. The very fact that you are conducting so many seminars and webinars these days for educating your clients. I was just talking to Mr. Karan Vora, and I was telling him this must have definitely enhance the knowledge base of all the members, and their responses also will be better as compared to other industries or other industry association members. uh, Friends, another front which you are going to face challenges, and that is more difficult phase, is the financial front. In these 2 months, because of the lockdown, the businesses were totally closed down. your cash flows were dried out, but at the same time, your certain expenses, fixed expenses were continuing. That was creating pressure on your whatever surplus funds are there. Many of you, by now, when you do the accounting, you will find that your units are actually running into EBITDA negative. Many of your units financially may be incurring losses, and many of you also would see that whatever credit facility you were using, there is a depletion in working capital itself. Because if you look at your situation of your stock or situation of your receivables, I am quite sure the value of stock, value of inventory, or value of your receivables must have got depletion. And insofar as your receivables are concerned, if your buyer is not in a good position, obviously some of the receivables will either get delayed, or you may have to consider them as a doubtful debts, and some of them you may have to write off. So the depletion on both sides, that is your inventory as well as your receivables, is going to eat up your working capital facilities, and therefore there is going to be a big hole in your working capital facility. Now when we approach our bankers, we'll see how we are going to address this. But this is the problem which all of you are going to face. And if you want to really restart the business, the funding requirement is I think a very eminent requirement of pumping in more funds. While I'm talking about pumping in more funds in the business, those who are having abilities to pump in their own funds, I think they will be in a better position. But those who are not having abilities to pump in from their own sources, obviously they will have to raise the funds from the external sources. And therefore, when you talk about funding, additional funding required, you will have to then look into all those pockets which normally can come forward to provide you the funds. And those pockets can be either the investors or even the your existing lenders, maybe from the banking or financial institutions. When we really look at all these issues, okay, now we are ready to start the business. One side we have these operational challenges, other side we have these financial challenges. How to get going? And if you know, along with you, everybody in this country, the governments, whether it is the central government, whether it's state government, all the regulatory authorities, everybody is actually working towards to see that how we can start, how the wheels of our economy starts moving. I always feel that when you look at the business, which are the enablers for our business? And in my opinion, either you call them enablers, you call them pillars of this our businesses. These enablers are the government of India, because they make policies which are normally conducive, or which are based on which our businesses are actually taking shape. The regulators, when we am talking about regulators, the regulators may be a Reserve Bank of India, or even SEBI, or even IRDAI, whichever regulator which is actually relevant for us. All these regulators are also working towards how best we can create the environment for restarting of this economy. Our third enabler is actually capital market, because we always see a lot of funds in the capital market moving. A lot of funds are coming from abroad also, and a lot of investors are also putting their their funds in capital market. But insofar as this particular segment is concerned, I am told that most of the participants and most of the members actually are falling into MSME category. So I have my own doubts how many of you actually get benefited from the capital market, and therefore I will leave aside the capital market insofar as our support system is concerned. But the most prominent support system for all of us is banking and finance. In fact, I will slightly be bold to tell you that 90% of our economic activities and 90% of our operational units are actually dependent on banking and finance industry of our country, because only the class people, only the class industries, class of units can get the benefit of capital market by raising funds through various instruments. But otherwise, rest all are required to go to the banking and finance. And when I'm talking about banking and finance, actually it includes all commercial banks as well as NBFCs and MFIs. So today, when we want to restart our business, I'm sure most of you also must be looking forward towards your lenders or towards your bankers or financial institutions to support you. And insofar as MSME is concerned, let me tell you, most of the MSMEs actually are supported by NBFCs also and MFIs also, because many times the MSME units, whenever they approach the banker, sometimes their requests are not actually falling within the norms of the banking norms, or some of you find that it is a rigorous process, whereas NBFCs are slightly easier. Sometimes people go to them for the quicker actions. Sometimes people go them because they are accessible. They are actually available within your vicinity. MFIs, which are actually catering to the small businesses, they are also actually filling up the gap where banking industry is not able to reach. So all put together, all three actually are complementing each other insofar as supporting the businesses and the industrial units are concerned. So now the time has come to look at the funds, and when, as I said, those who are having funds, they will definitely put in their own funds and restart, but otherwise most of you will have to go to the banking and financial industry. You have seen the government of India has already declared a financial package. They have declared in two tranches. First tranche was of 1,75,000 crores plus some of the governance issues also they have tried to sort and give some relief on that. The second package which came is about 20 lakh plus crores of package. And within that, if we talk only about the MSME, you have seen that the government of India has come out with the emergency loan scheme of up to 20% for all the MSME units. And this 20%, how they are actually going to work out the 20%, as per the scheme, the balance outstanding as of 29th of February, 20% of that you will be in a position to draw additional emergency loan, and government of India has given, in fact, 100% guarantee for this loan, which actually gives a lot of confidence and encouragement to the lenders to lend this money. Secondly, in this scheme, what they are said is this will be available for those units which are having SMA 0 and SMA up to SMA 1 category, SMA 1 status category. That means your overdue should not be more than 60 days, and only those units will be in a position to get the loans from under the scheme. They have also come out with subordinate loan scheme up to 20,000 crore, and under that the SMA 2 as well as NPA accounts are covered, wherein you can do the restructuring of these accounts. And one more 50,000 crore fund of fund they have declared under this category, which is actually good for the new units, because through that the capital support can be given for the new units, which those who want to start. So the government has actually considered the existing units which are functional by the 3 lakh crore, the units which are having stress through and non-functional also, but functional but NPA, stress and NPA, but all functional. For them, subordinate loans, and for those who want to start the business newly, for them also they have come out with a fund of fund. One more actually step they have taken is, in order to create the competitiveness or create the opportunities for the MSMEs, the tendering process, wherever tenders are required to be filed for getting the contracts, they have extended, they have said that up to 200 crore rupees of tenders, only the domestic players will be in a position to bid for that. So these are certain schemes which government of India has declared. So government has actually come out with this scheme to help the industries. In fact, all of you must be thinking, all of you must be expecting that government should have come out with some kind of a fiscal stimulus as is given by various countries. In fact, when we look at the countries, other countries, how they have given the stimulus, people start talking about why government of India has actually resorted to giving loans and not rather stimulus. Friends, we cannot compare the financial situation of our country with those with Germany or with USA or with the UK, because their financial situations are totally different. Our country is always having a fiscal deficit uh, budgets, and our fiscal deficit already, which was controlled up to 3 or 3.5%. Now there is a pressure on the fiscal deficit also, because as I said, as your businesses were closed, the government earnings also were actually stopped. Today there is a tremendous pressure on their revenues, and it is very difficult for them to manage all the expenditures whatever were budgeted, and there is going to be a shortfall in their revenues, and this shortfall is going to increase our fiscal deficit, which again will have a lot of rather adverse impacts on our economic situation, and all of you are wise enough to understand that. So therefore government is not in a position to actually support, but whatever is possible to the at least the bottom of the pyramid, those people they have tried to help. They are actually putting money in their accounts through various DBT schemes, various government schemes, and they are trying to give some kind of oxygen to those people where there are absolutely no means of earnings. So it's a difficult time for the government of India also to come out, but within that, whatever they are taking the steps, as I said, this is a very challenging time, and in this challenging time, because these things were not seen earlier by anyone in this generation, whosoever is taking any steps, those are well calculated as per the estimations, as per the expectations, as per the understanding whatever is there. Lot of experts are putting their heads together and, to see that our country is actually pulled out safely from this pandemic situation. So government has done whatever best possible for them. The Reserve Bank of India has already created a lot of liquidity in the market, because having seen that there is a need for, providing loans to industries, providing loans to the businesses for revival, they already created a lot of liquidity in the market. As you know, they reduced the CRR by almost 1%. The repo rates have been actually reduced to such a level that obviously Reserve Bank of India is actually creating a path for reduction in rate of interest, which normally on all business forums is being talked. In good times also people talk about rate of interest. So obviously in this time rate of interest is going to hurt, and therefore Reserve Bank of India has charted a path on which the transmission of this rate of interest will be smoothly given to the businesses, and in coming days you will see a reduction in the rate of interest. When we come to banking and finance, friends, now by now you must have realized that today, if at all there is going to be any savior for majority of our businesses, is our banking and finance industry. Now, there will be a lot of expectations. The government also has created enablers. The Reserve Bank of India has created enablers. Government of India has given them the guarantee also that if anything goes wrong, 100% we will cover. So the expectations in the market that now the banker should be in a position, or lenders, including NBFCs, should be in a position to lend you freely and very enthusiastically. Obviously, that enthusiasm is always there. I have spent 41 years of my career, rather 41 years of my life in banking, and I know for sure that this banking industry, banking and finance industry, has a great amount of contributions in the development of this country. And when I'm talking about the development, all of you have seen that whether it is the industrial development, whether it is the infrastructure development, whether it is the green revolution, whether it is the white revolution of this country, agriculture sector, everywhere, education, healthcare, everywhere, whatever development has taken place during last 70 or odd years, you will see the banking industry has given a tremendous support for all those initiatives, because right from beginning, our country was not a very capital comfort country. our capital was always short. Capital creation, in fact, was very much required in our country, and we have been consistently making efforts to create that kind of capital. But in the absence of capital, obviously, the debts was the only solution for all these developments, and out of debt only, we have seen our country has developed so far. And going forward also, our country will have to go through the debt, right? So when we approach these banks, approach these NBFCs, today we also need to understand whether they are in a position to support us or not. I think they are in a position to support. However, they need some enablers also. And what are their enablers? I can tell you, you must have observed during last few quarters. In fact, our credit growth is depleting, and the credit growth has almost come to around 6%. And this is the RBI data which is talking about. We have seen credit growth almost 14%, 15%, and from there it has decelerated to almost 6%. On one side, there is no credit growth. On the other side, there is a liquidity, surplus liquidity in the system. During prior to COVID, rather, prior to this challenge, the banking system itself had kept almost 8 lakh crore rupees with the Reserve Bank of India under the reverse repo. And thereafter, Reserve Bank of India has created additional liquidity. So almost when we entered into COVID challenges, we had almost 11 lakh crore of liquidity available. So from liquidity front, I don't think banker will have any problem insofar as lending is concerned, and these funds will be very easily available to all the industries for their revival and survival. However, why the credit growth was actually decelerating? You must have seen during last few years, our banking industry has seen a tremendous growth in NPA situation. Because of NPA situation, the provisioning was required. Because of NPA situation, there were banks were actually entering into losses. Many banks were actually put under, in fact, 11 banks, if I'm not wrong, were put under prompt corrective actions by Reserve Bank of India. Subsequently, the Government of India also has actually undertaken mergers of banks. The banks. Somebody's mic is actually on.
Done, sir. Done.
Okay. So these banks were not in a position to lend. It's not that they did not want to lend, but their ability to lend was actually getting slightly hampered because of their weak financial situations. The minimum required capital as per the regulators, as per the Reserve Bank of India norms, which is actually based on the international norms, that much capital was actually pumped in by the Government of India time and again, and to see that these banks are remaining afloat. A wonderful job Government of India has done. The moment banks went on, incurring losses and weakening the financials, the stock markets or the raising funds from the open market also was becoming difficult for the banks, and therefore only source for the bank, the assured source, was the Government of India, at least for the public sector banks, and Government of India supported them time and again. Now, this capital which was supported, which was given to the banks, was on one side, it was for the regulatory requirement. So there was not much legroom or not much elbow room available for financing. Secondly, there was also restrictions because of the weak financials on the banks to lend for only the good quality accounts. So you must have seen during last few quarters, the bankers were, or rather I will say the lenders were selecting only the good accounts where the credit rating is A, AA, AAA. And that was the reason many of you must have felt that there is a averseness amongst the bankers to lend. And this averseness actually has got spread across the industry. And it was actually visible in that credit growth. Even though the justification given is there was no demand, I can understand. During this pandemic time, during this lockdown, there was obviously no demand. But prior to that, there was a demand. And if our banking and finance industry was not lending, that means they were actually going through certain other issues. So now, when we are looking at them, the government will have to again look at the capital requirement of these banks, because when we want to increase their lending by, let's say, even this 3 lakh crore which is to be deployed. In fact, in my opinion, what is credit deployment is required will be much more than 3 lakh crores. But at least insofar as this MSME is concerned, if this 3 lakh crore is to be deployed, the government of India will have to create, rather support them again with the additional risk capital. Now, because of this pandemic, there is a stress already in the system. Prior to pandemic also, there was a stress. So bankers are actually looking towards incremental NPAs, and those incremental NPA also is going to eat up their capital, existing capital, plus the provisioning which is required for the new NPAs, plus aging of NPAs. That additional provisioning also will put some pressure on their capital. So once the capital is given, I think the banks will be in a position to lend. And the government of India's statement, what I have seen today, is the government, most of the banks are having adequate capital. Let us look forward that they will support us. Insofar as NBFCs are concerned, NBFCs are going through a difficult time. Their funding channels are choked up, particularly after the big fiasco or big, I can say, fall of big NBFCs like ILFS and DHFL and all. So many of the NBFCs are also finding it difficult to raise funds and then in turn support you. Earlier, banks were funding a lot to NBFCs and NBFCs were in turn funding to MSMEs and small businesses, because wherever bank was not in a position to reach, we will support through NBFCs. There was one more compulsion on bankers that as per Reserve Bank of India, 40% is required to be deployed to private sector, and MSME, as all of you know, is one of the private sector. So therefore, we were lending to NBFCs and lending to NBFCs which are having that portfolio which was recognized under private sector. Out of that benefit, banks are also were getting benefit. But today, they are also not in a position to support you. In fact, Reserve Bank of India as well as the Government of India have been trying to revive these NBFCs also, MFIs also. They have created some TLTRO mechanism, if you know, to support the NBFCs and MFIs through refinancing also from the SIDBI. All efforts are actually being undertaken to support the businesses, to see that the businesses get revived. So friends, if you look at it from all sides, everybody is actually trying to help us, and everybody is trying to see that our businesses are actually improved. Now it comes to you that when the enablers are there in the market, and the government and Reserve Bank of India is taking care to see that these enablers are coming to your way, what is your role to play in this one? Your role is to see that you first of all survive in your businesses. How to survive in your businesses? Because the government, the bankers, the financial institutions, all of them will have a broader ideas or broader policies which will cover the industries. But insofar as individual unit is concerned, you will have to work out your own strategy. Right from the strategy, and I will talk only about the operational strategy. Of course, you will take care of operational strategy, and there all these enablers, all the government or the bankers will not come in picture insofar as your operational issues are concerned. You'll have to make tie-ups, you'll have to strengthen your supply chains, you'll have to get tie-ups with the buyers, you'll have to see how your machinery and everything is restarted, all the processes are restarted. The financial side of it, you'll have to work out very quickly what is your immediate need. Your immediate need may be, as I said, there is a depletion in the working capital. So how much is working capital depletion? And that is what in our technical term we call it a net working capital. So how much is required for NWC to shore up? Because when on one side your businesses were not working, no cash flow was there. As I said, most of the money must have got diverted, working capital money, for the fixed expenditures. The depletion in the value of your inventory, depletion in the value of your receivables, all this would have created a certain kind of hole in your working capital that has to be first recouped. Now, when you go to bankers, obviously the bankers will find one technical issue, that the purpose of the lending. The purpose of the lending normally is for the productive purposes, and here we are talking of actually uh, mm, recouping the funds which have already gone. But as per that 20% emergency scheme which Government of India has taken, they are not talking about the purpose, and that is why this is an excellent scheme which the Government of India has come out with, that irrespective of the purpose, they will have to work out a 20% of your loan and they will support for that. Once this 20% is taken, I think you will be in a position to survive. But let us say some of you may not be in a position to take, some of you may require even 5%, some of you may require even 10%, 15%. But some units may require, which are capital intensive units, may require little more than, uh, let's say, a little more than uh, that required 20%. You may require 25%. You should be in a position to discuss this across the table with your lenders and convince them. 20% is just a guidance given by Reserve Bank of India. But if your survival and revival is required, you will have to prepare a financial plan, financial projections of your business, and sit with your lender and convince them that, look here, this is what is required. Insofar as lenders are concerned, let me tell you, looking at this exposure of the lenders, total exposure on all the industries, lenders also will not like that their account should go through the stress, or their account should go down to NPA route, wherein it will be difficult for them to even recover their money. So in order to secure their existing exposure, the lenders also will take care that you are supported adequately to see that your business is coming out. Then, as I said earlier, normally lenders, we being a custodian of public money, we are always worried about whether the money will come back or not, whether this money will actually, whatever we are lending, that will be safe and secured, whether it will actually give me some returns, because these issues only the money is normally lent. And you will have to convince once again, because this is restarting of your business. The businesses which were on the verge of collapsing, you are going to restart the businesses. So it is as good as a new beginning. So when you start a new business, how you are going and sitting in front of lenders and convincing them that how your business is going to do well. Similarly, you will have to convince this time also that your businesses are going to do well. For that, if required, you'll have to change your business model. When I'm talking about business model, it is a business line also sometimes, because if the customer preference is changed and if your business is not in those kind of activities which are immediately getting revived, or if your business, if you are involved in, let's say, a luxurious goods, perhaps you will have to look into that whether luxurious goods will continue in this situation. Let me tell you, one of my known person who was also MSME unit, he used to manufacture a ladies purses, leather purses. And now post pandemic, you will find that these ladies purses obviously will be considered as a luxurious goods, because his product was a luxurious product. Quickly, he has actually changed all these machines, and a little bit of changes he must have done in his processes. When the opportunity came, he immediately changed it to manufacturing these PPE kits and masks. Now he is supplying this mask itself to Flipkart and Amazon and all in lakhs quantities. So he changed it. He could change it. So similarly, if you have any opportunities, if you are in a position to change your business line as to align with the customer preferences or to align with the demand in the market, immediately you should do that. I know many of you may not be in a position to do that, but whatever your business line is there, you'll have to relook into it, whether the business model, the functional business model will continue same way or not. Perhaps your credit period, there is every possibility that it will get extended. If earlier you were getting money within 90 days, perhaps now you will require 120 days, 150 days, 180 days. So you will have to work out your financial needs and sit with your banker to get the proper funding. Let me assure you that bankers are always, helpful, provided you are giving them that kind of confidence. If you have your confidence that your business will revive, I think you should pass on that confidence to the lender, and lender will then definitely come and support you. One more thing I like to tell you here, that what we have seen always, that people sometimes create rosy pictures, and just to take the additional funding and all. Now the time has changed. The nature has put actually reset button. So when we are actually restarting, please don't resort to all those um, manipulations in your systems. If you require funds, don't manipulate the things that going ahead you will go and land in trouble. Whatever factuals are there, you should be very transparent and sincere enough to sit with your factuals with your lenders. I'm sure they will support you. Friends, let me assure you that the future for all of you is really a great. Even though we are talking about all these problems, once you come out of this problem, we are going to see an excellent future for all our entrepreneurs. We are blessed with our country, because our country has tremendous domestic demand always, and that domestic demand itself always used to give us almost 3.5 to 4% of GDP growth. Mind well. So that domestic demand is not going to get killed so quickly. Domestic demand will be there. Also, there are going to be a lot of export opportunities, and the way the China is actually is facing their credibility issues, the many of the industries are actually looking for moving out of China. Many of them are actually looking at India as a destination for moving out. Once big industries come, automatically the ancillary units and automatically other demands also will increase. Apart from that, the countries which were actually exporting along with us to various European and American market, as well as Latin American market, many of those countries are actually battered much worse than us, and it might take a little longer time for them to come. So that vacuum which is going to get created, we are going to get the opportunities to pitch in there. And therefore, you must have seen our Prime Minister also has said that we must look at the opportunities which are now thrown to us by this pandemic. So I'm sure you will also work on these opportunities. Don't get bogged down. Don't be pessimistic about this. I'm particularly very much optimistic. And you people, you have seen most of the difficult times. Particularly, I remember in 2001 when there was a great earthquake in a Kutch area. Almost everything was vanished. Today, within 20 years, 20 years is not a long time, it's the shortest time. In 20 years, it's again a very industrious area, it's a prosperous area, and therefore, coming from that region, I'm sure you people, wherever you are having your units, whether within Kutch or outside Kutch, you will come out with a great amount of confidence. The confidence is required today for you to face these challenges. So my best wishes to all of you. I will stop here and then we'll open up this for question and answers. Thank you so much.
Yeah, thank you, sir. Thank you, sir, for your guidance and obviously a bit of reassurance in this difficult time. Although we have received a lot of questions on some of the specific items, areas that you mentioned.
Right.
So before that, I'll just propose before we go to the Q&A, and I'll ask all the audience to also share a Q&A on the Q&A chat window while I'll finish the vote of thanks. Uh, so first of all, sir, thank you again once again for your time today. Your speech, as I mentioned, was very reassuring, and I hope the Q&A sessions will also benefit the audience who've come. I would also like to thank Amrut Bhai, our ex-president, who was the convener for today's session and helped put this program together with the CFM group. From the CFM group, special thank to Mr. Pandey, Mr. Sharan, and their entire team who has helped to put this program together. So with this, I will proceed with the Q&A question, sir. The first question, sir, is specifically on the 20% scheme. So the first question is, sir, is 20% on the base loan that was approved by the bank or on the current outstanding?
As per the scheme, it is the current outstanding. Not current outstanding, outstanding as on 29th of February 2020. Right. So if I know from where this question was coming, if somebody has not drawn on 29th February, he may be a loser. But I think there are many forums from many various forums. The request has been submitted to Government of India to look into this static date of 29th of February outstanding. Because instead of outstanding, if it was a limit, perhaps it will help many people. But government has, when they are come out, they have said the outstanding is on 29th February. So at least as of now, we'll have to go ahead with that.
Understood. So on and this 20%, sir, is this with so while it is without collateral, I understand, but do we have to submit standard financial plans for this, or this is something you can just apply and get the loan disbursed based on your outstanding?
Uh, Actually, whenever you go to any lender, you will have to submit some kind of plan. And even though we are having that impression that this is an automatic loan, when you look at the guarantee document of which is actually issued by National Credit Guarantee Trust Company, NCGTC, that talks about the bankers are supposed to supposed to take care of business viability and the conduct of the account before sanctioning this loan. So obviously banker may ask you certain business plan. That is why I was saying you'll have to prepare your business projections and submit it to the banker.
Okay. So again, linked to this, you mentioned that this is only for standard accounts.
Yes.
What do you do if you are not a standard account at currently? What is the option available in this fiscal stimulus? What are the other options available for cases where you're not standard assets?
As of now, the what is option available is up to SMA 0 and SMA 1. SMA 2 means where you are having more than 60 days overdues, perhaps it will be difficult. But let me tell you, this also has been taken up with the Government of India by various forums that at least SMA 2, because up to SMA 2, it is a standard account. So at least up to SMA 2, if it is considered, perhaps that benefit will be extended to all accounts. And practically, as a practical banker, I also feel that during this difficult situation, when the businesses were closed down, we will find very difficult to uh, retain our that standard, or I can say regular account status. Everybody will be going through that SMA 1, 0 or 2 category.
Okay. Okay. Sir, again, for this 20% scheme, are all banks, even cooperative banks, covered? Because we have a question from a participant who has mentioned that when he approached his cooperative bank, they said that they are not part of this 20% scheme. Uh, so just some guidance on that, sir.
I think that document, if you read it, that document very clearly says all the scheduled commercial banks, right? And when they talk about scheduled commercial bank, obviously, if cooperative bank is not scheduled commercial bank, it will not get covered into that. I have that document with me, and eligible MLIs for the purpose shall include all scheduled commercial banks, NBFCs, and financial institutions. So they are talking about scheduled commercial bank. If scheduled commercial bank is there, then they will be considered as the MLIs, otherwise not.
Okay, sir. So the next question is just somebody wanted guidance on this one-time restructuring that has been allowed by RBI for rescheduling. If you could just guide on that and how one should decide about that, sir.
As per that scheme, whatever is available for the MSME, the account, actually earlier we used to do a lot of handholding, and various schemes were there where we were able to maintain the account as a standard. But subsequently, the Reserve Bank of India said when you do the restructuring, the account will not be actually maintained as a standard account. So for 1 year at least, you will have to undergo through that NPA. But when it is a structured restructuring, it is understood by your lenders also that the NPA category for 1 year is technically they will have to maintain. And once your performance is good, you can upgrade your account after 1 year. So that observation period is there for 1 year, you can say. But during this, when this scheme was launched, as I said, on various forums, this is getting discussed that a deep restructuring is required may be required for most of the businesses, and perhaps Reserve Bank of India will have to come out, because time and again, Reserve Bank of India also has seen the situation and come out with the measures. I am quite sure once they see the extent of problems which all the industry is facing, perhaps they may come out with one-time restructuring by not downgrading the account but keeping the account in a standard category. But we'll have to wait and watch how regulator is taking decisions.
Yeah, Karan, this is Jyotisharan. Just to supplement what Karat sir has said,
Yeah.
I think you mentioned about the fact that this MSME, the one-time restructuring, which is permitted by RBI, right? RBI window for one-time restructuring of MSME industries.
Right.
Right. So there, the 2-3 criteria which RBI has stipulated is that the outstanding as on 1st of January 20 should be 25 crore. The account can be SMA, but standard. So it covers all SMA accounts, but not certainly the account should not be NPA as on 1st of January 20. And the other criteria is that this restructuring package, whatever is approved by the bank, will have to be implemented before 31st December 20, right? But then another rider is there that this scheme is available only for MSME units who are registered with GST. Right.
Okay.
So GST registered units can avail of this facility.
Understood. Okay.
Yeah. Yeah.
Thank you. Sure. And so just wanted to understand this MSME registrations, how does this impact credit rating going forward? Any
You mean GST registration?
MSME registration? Where
MSME registration.
is
Now, see,
that
what happens, I will tell you. Now, since you are in this forum also, you must be aware that lot of MSMEs are actually operating in an unorganized sector. When we talk about unorganized sector, it is where registrations are not available, where people are not on the digital platforms. So during last few years, you must have seen Government of India is also trying to create that kind of platform where everybody will have to be moved. And this time, the unorganized sector actually is more in a difficult situation than the organized sector. At least organized sector is in a position to save themselves, but unorganized sector has got a different kind of problems altogether. So these registrations will obviously be the plus points insofar as credit rating is concerned.
So one question back on the 20%. One participant has asked whether this 20% is in addition to the 10% that was announced earlier for MSMEs.
Yes, actually, earlier which was announced was a 10% for MSMEs, and many of the banks have already given that, right? Now that 10%, if that has helped you, then perhaps, as I said, you'll have to rework your requirements. You cannot go to bank and say that, okay, 10 plus 20, you give me 30%. I am eligible for 30% as government has declared. That attitude should not be there. You can sit, okay, if earlier 10% has helped you, you should not even opt for this 20%, because whatever incremental loans you are going to take, mind well, it is to be repaid. And this is going to create some kind of sustainability issues on the units also. Because if existing loan, whatever you have taken, if you are not in a position to service that loan itself, right, then incremental load when you are taking obviously is going to have that kind of adverse impact on the sustainability of the business itself, right? So
Okay,
use it very sparingly, as I said, only for survival, and then once you are survived, banker will be in a position to support you further for the revival of the businesses.
Okay, sir. Thank you so much. So the next question that I have is this 20%, is it fund-based for fund-based limits only, or does it also extend to non-fund-based limits?
No, it extends to non-fund based limits also. Actually, this confusion is always there, fund based and non-fund based. Let me tell you, whenever we work out the credit facilities, it is only the delivery of the nature of delivery, whether you want a bank guarantee, whether you want a letter of credits or all, that is decided based on your requirements, business requirements. Otherwise, when we calculate the working capital, obviously these facilities are considered as a funded limits.
Okay. So the other question from a participant is relating to the guidance which the government has given on the interest rate and the payment schedule for this 20% that you're borrowing. Any guidance on that, sir?
All of you know that there is a 1-year moratorium government of India has declared on this new loan particularly. Earlier loans, of course, the Reserve Bank of India has given you 90 days time, and then I think it is again extended by another 90 days. So that moratorium is there, but this particular 20%, that moratorium is for your previous facilities. This 20% will have a 1-year moratorium, and the repayment is within 3 years thereafter. That means you can say overall period is 4 years for this new facility, out of which 12 months is a moratorium, and next 36 months you will have to pay back this facility.
Understood, sir. Thank you. So this one question is an MSME which is an NPA, whether they can avail the package. You already answered that no. What would be the
No, 1 second. If NPA is a functional unit, government is very clear. Account is NPA and unit is closed down, they may not be in a position to become eligible for this. But account is NPA technically, but otherwise unit is functional. I think those people will be in a position to get support of this 20%, get support of this 20,000 crore out of subordinate debt.
Okay, okay, sir. Sir, and in light of the changes that have been announced, any specific items that or guidelines that people have to take care in terms of the IBC process while it has been put on hold? Uh, accounts which are stressed currently, is the next step that they should be taking, given they started to reopen, but they're not eligible for this 20%. How do they discuss with the bankers, and how do they take that forward?
So this 20% scheme is for the MSME, but the other exposures, as I said earlier, it is in the interest of the bankers also to see that their exposure, by little bit of handholding, they can save 100% of their exposure. And this is the guidance. If based on this guidance, if bankers are taking the decisions of supporting the other units which are not actually eligible for this 20%, or which are in the mid corporate category or a corporate category, there banker will have to take certain kind of decisions to see that how the entire exposure is secured. And I think that will be unit wise, the bankers will take call on it. Because otherwise, if your credit history is good with the bankers, and if you already always shown that your performance with the bank is good, I think bankers will come forward and restructure those accounts also.
Okay, thank you, sir. So one question, the next question was relating to what you've already mentioned before, that if there was no outstanding as of 29th February, you would not be eligible for this 20%. Is there any other, I mean, if you had a sanctioned facility but you had not drawn down, is there any other way to seek this 20%?
So as I said, the government will have to amend that scheme.
Oh, they will have to.
And yes, and the requests are already lodged with the government of India for looking into these changes. So therefore, I think some kind of relief will come, because it is not only this. Now some people have not taken loan altogether.
Understood.
I know many people from Kutch area, they feel that taking loan is not a culturally good. In certain areas in India, even today, people don't prefer to take loans. But now, if they are in a problem, just because they have not taken loan, they will become ineligible for any funding. So in that case, the banker will have to actually give a considerate thought to it, that how best, because it is a question of not only revival of one unit. Karan, I look at it a larger picture. It is a question of revival and survival of our country's economy. And collectively, all these small units, we make a country's economy. So if every and each unit is supported properly, perhaps we will be in a position to strengthen the economy of our country, and that in long term will be beneficial for us. So bankers definitely will do that. Whatever enablers are required for that, the government and Reserve Bank of India will continue to support that. But I'm sure all collectively will be in a position to support each other.
Sure. Thank you, sir. So one question is relating to specific bank attitude. A lot of some of the one of the user has mentioned that private banks are refusing to offer the 20% and any other additional financing, facilities. They are insisting that you please approach public sector banks.
Mhm.
How does one tackle, if he has an existing relationship with a private sector bank?
Now, actually, it depends on case to case basis. Being a banker, whether you are in a public sector or whether you're in a private sector, it is just a category which makes a difference. Otherwise, your basic functions are same. You are supporting your clients during their good time and during your bad time also. So if a cooperative bank has, let us say, already lent 10 crore rupees, and by not giving 1 crore rupees or 1.5 crore rupees additional, which is required for that unit, what they are going to do is they are going to rather create risk for that entire exposure of 10 crore rupees, right? So just because the government guarantee is not there, they should not look at it from that attitude that no, government has not given us a guarantee, so therefore we will not sanction this. And let me tell you, even though the scheme talks about, it looks like automatic nature, the guarantee is not automatic. For those who are thinking that a guarantee is automatic, if you look at the guarantee document, it has put a lot of responsibility on the lenders that how they should lend it. And if any lenders start looking at those wordings, and if they take it in letter rather than in spirit, I don't think anybody will be able to lend it. But public sector banks, particularly, always we are taking a risk and giving. Now, you must have seen even public sector banks also, some people are risk averse. That is because many times that accountability keeps on hanging on their head, that what will happen if the account really becomes NPA going ahead. So that accountability fear has been discussed at all forums, and I think necessary steps will have to take, how to address, how to give the confidence that okay, if you are doing this job of surviving the economy of the country, and if you are taking decisions which are in the interest of the unit, which are in the interest of the bank, in the interest of the economy, I think everybody will have to protect those decisions.
So there are one few questions from startup entities who are just venturing into new business. What would, in your view, be the best in the MSME segment? What would be the best way to seek financing currently? Maybe not relating to this fiscal stimulus, but overall, somebody is asking for guidance in the current scenario, where banks remain risk
I
averse.
No, let me tell you, bank remains risk averse. That's a different thing, but that also can be tackled. It is not that it is difficult to tackle that risk averseness. As I said, why they are risk averse? Just two, three things I will tell you, not very big things. One is they are very selective about account because, as I said, they have the responsibility of this public money. They are a custodian of public money. They want to see that okay, whatever money is given, that should come back. Number two is risk capital. Whatever additional risk capital is available, they want to use only for the good accounts. If they are having surplus risk capital, then perhaps they will be in a position to extend facility to various other units also, depending on the credit rating and quality of the businesses. Number three, once account becomes NPA, actually banker, when, and all of you must have actually seen how rigorous process bankers are going through when sanctioning your loans. It's a very, due diligence and all is so critical that many times people get fed up when they want to take a loan from bank, that why they are actually doing so much of due diligence and so much of interrogation of the borrowers. But still, once we sanction the loan is sanctioned, or credit facilities are sanctioned based on some futuristic view, based on certain projections, and those projections fail somehow because of certain reasons which are beyond the capacities of the borrower or even anybody else. The account becomes NPA. The first blame comes on the banker who has sanctioned, who has done the appraisal. And our internal systems also of accountability uh, puts that blame, and then that individual suffers actually whenever accountability process starts against anybody. He suffers in his career, he loses his peace of mind, his family gets disturbed, and very few examples are there of such cases, but demonstrative effect is larger on the larger community. So nobody wants to do. People, in fact, start thinking that if I don't take decision, I am safe. And therefore, as I said, this is a systemic issue, and therefore everybody has to sit together and understand, okay, how this can be sorted out. The confidence has to be given to the banker, Baba. If you are really taking a good decision, if you are taken, let's say, due care, then it will not be questioned. And that investigation or whatever internal inquiries and whatever is there, that should be concluded very quickly. If it is lingering for 4 years, 5 years, 10 years, then it really becomes a very, very demoralizing, not only for that individual, but for others also. So these are the systemic issues. Everybody has to understand that and work on it, especially when these challenges are thrown to us, and especially when the entire revival responsibility is actually thrust on the banking and finance industry. This is the time for us to look into these issues.
So one question which has come is, there are given there are these new norms, some of these units do not have necessarily skill set to deal with bankers. So are there any other special guidance which the government has given to the banks for handholding in specifically financial, where specific sectors or areas specifically where there is stress in terms of financial stress?
So stress that way, if you see, as I said earlier also, the revival itself, forget, everybody is in the stress, but who will come out of stress very quickly? Now it's very much crystal clear that, let us say, for example, the hospitality, the luxurious, your what you call it, resorts and all, those kind of businesses will take longer time. The luxurious goods, if anybody is in the luxurious goods, people will like to save some money. People will have to wait and watch how this critical situation is passed, and then only they will start flexing out. Nobody is going to actually spend money for, or what we call at a discretionary spending. If I have discretion whether I should spend or not, I will use that discretion not to spend in today's situation. So therefore, all these sectors, we already know, bankers are also identified, okay, these are the sectors which are going to go through the stress situation. Let me tell you, most of the sectors, always, these are, stress is a cyclical. This time it has come because of pandemic, but I have seen many sectors, like, let's say, for steel industry, every 5 6 year 10 years you will see some cyclical changes in that sector, and it will go through stress situation. It will go, it will have a downturn, but again it comes out. Real estate, of course, this time it's a longer impact, but otherwise real estate also, we used to see that it has a cyclical effect. Always whenever it goes down, the bankers do the handholding, and then the sector comes out. Your textile units, now many of your Kutch corporate forum members must be in the textiles also. Textile also very cyclical. So whenever this kind of cyclical issues comes, handholding is done. Unfortunately, in 2018, Reserve Bank of India actually cancelled all the handholding mechanisms which are available. I think this is a high time for Reserve Bank also to relook into all those mechanisms, all those schemes which were allowing handholding. If those are not reintroduced, perhaps it will be difficult for reviving this economy.
Thank you, sir. So last two questions, a bit difficult. You may choose not to answer if you think so. So the first question is, sir, a hypothetical situation that you have loans from a bank and you also have loans from unsecured other sources, uh, and you have only limited amount to pay only one of them. What would be your guidance, in such a scenario? And second question, sir, I have is, recently a very prominent banker mentioned that if there is moratorium on loans, there should be moratorium on not paying interest on deposits as well. Your views, if you could share.
Coming to your first question about to whom to pay first. See, it's always a calculative risk every individual will have to take. If you have borrowed from, let's say, private sources, and if there is too much of pressure, including, let's say, even physical pressures for payment, you will have to look into that. But otherwise, institutional support is always preferable. If you want that your institutional support should continue and account should not become NPA, then it is better to pay to the institution first, to lender first, because their support is a long-term support. The private borrowing support will be always a short-term support. It is a cost also is a very high, but once you get a long-term support, I think you can then be in a position to pay off the private lenders also. But preferences, as I said, depending on the situation, that individual will have to look for the preferences. Your second question was about the interest or during moratorium period, right?
Yes, sir. So, no, so
Now,
the this particular banker mentioned that when there is no loan, wherein then there is a moratorium and stress, banks are having difficulty collecting loans and interest. They should also have no deposit, no interest being paid on the deposits that the banks have. So, just wanted your view on this.
so my view on this is banking is not a charitable business. It's a business. All of you are a businessman. All of you are doing business for earning something out of business, right? If it is a no profit, no loss business, then you will be working like a NGOs. Banking is also a business and it's a commercial business. Why commercial business? Because the banks are, what are the resources of the banks for lending? Resources are public deposit. And if I am required to pay interest to the public, obviously I will have to charge that interest, recover that interest from somebody. In addition to that, if I have to run my business, my administrative cost is there of running the business, then that administrative cost. In addition to that, if my investors, because apart from my depositors, my stakeholders also include investors. And if investors want some returns, now all of you must be investing in stock market. If somebody has invested, let's say in a private sector bank or a public sector bank, you obviously look for some dividends as a shareholders. So those dividends also have to be paid. So all this put together, if we say, we'll have to earn money, and if we don't earn money, perhaps this business will stop. We will go back to those kind of, what we say, a barter exchange scheme, where private deals you'll have to look for some kind of private lenders, right? Because otherwise bankers will have to survive. And this is the situation where I see there are a lot of hue and cry made that banks should not charge interest. In fact, today, yesterday there was a comment from Supreme Court also on one of the PLIs, which I am reading through newspapers only, that Supreme Court is asking why interest should not be waived during that moratorium time. Right now, Reserve Bank of India, Government of India are giving their submissions to Supreme Court. I am sure some reasonable decisions will come out of it. But the very question that to question charging up interest itself will not be a reasonable, because if we don't charge interest, how the banks will survive? We always say, no, वो सोने की मुर्गी देने वाली, सोने का अंडा देने वाली जो मुर्गी होती है ना, उसको सारे अंडे अगर आपको चाहिए तो उसको जिंदा रखना चाहिए. उसको काट के आपको इकट्ठा अंडे नहीं मिल सकते सोने के. So we'll have to keep these banks alive. And as I said in my opening remarks, our country is actually supported 90% by banking and finance. Our country's economy, rather. And therefore, survival of this banking and finance is also equally important for continuation of our economy. In short term, you may look for these gains like interest waiver, but in long term, if these institutions are not survived, perhaps economy will be heading towards doomsday. Think of that.
Thank you, sir. I think that was very well put. I think that's excellent insight on how the bank works. So thank you so much. I think given that we are at the end of the session, Mr. Sharan or Mr. Pandey or Mr. Shah, if you would like to add any closing remarks before.
Sharan?
Yeah. So, in fact, the points raised or discussed by Mr. Kharat, I think, would have given a very good insight so far as the entire gamut of relief to MSME sector is concerned. I would just like to supplement him by mentioning 2 points here. One is that recently Government of India has also changed the definition of the MSME, which I'm sure all your members would be aware about that. And the second thing, the one more relief which Government of India announced, I don't know, your members can give a feedback on that, is that what government said that the dues which were there with the government for MSME would be cleared in 45 days. Right. So, it is for MSME units only to give us a feedback whether it has been done by the government or not.
Okay.
Okay. So these 2 points, and the rest of the points are very well covered by Karat sir. So nothing more so far as that is concerned. So and the last but not the least, I would like to add that if any of your members who are having problem in understanding the issue or presenting their case before a bank, they can always approach us, because we are also in resolution, and we can always handhold them and then guide them about the way to go forward.
Thank you, sir. For all the members, you can reach out to us if you need the contacts of CFM group, and we can share the same with you. Once again, sir, thank you so much, sir, Mr. Kharat and the CFM team, for taking this time out and guiding our members. I think it's been a very useful session, and I'm sure all the insights given and all the necessary knowledge will help them restart their businesses as they go forward. Just to also make last one announcement, this for our members, this Sunday we have a program with the CFO of Reliance Jio, who would be speaking on living in a new normal, technology enabled world. So please do register for the same, and also to add, our membership is open, and you can please register. After 1st of July, we would be asked, only members who are registered with us would be able to attend our programs. So just please do note on the same. All right. Thank you, everyone. Thank you, Mr. Kharat, once again.
I must thank Karan and Philip for organizing this session. Actually, as a banker, as an ex-banker, I can say we are always, we always take pride and joy in talking to our MSME clients, particularly. Whatever problems they have, please let them flag it to you, and we will try to see that the best solutions are provided to them. We are always at your service, even though I am particularly not in the industry, but through CFM platform, we can definitely help all of you, whatever is possible. Once again, on my personal behalf, I thank this particularly Kutch Corporate Forum, and look forward to have better interactions in future too. Thank you so much.
Thank you, Karat sir.
Thank you, sir. Thank you, everyone.
Thank you.